Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, May 20th, 2024. Let's take a look at the charts. I'm going to start with this one here. This is a weekly bar chart. These are the parameters, especially 222.22 on a longer term basis. 140.50 is a long-term trend line. We tested about a month ago, and it did hold. At the time, we didn't have it weighted as a 4-star multi-week containment level, but it did hold. And so it is still there and still a meaningful downward pivot point as we move into June-July trade. But until then, you could consider this near-term support. I don't even show it here. I would call this a 3-star support, 222.22, 4-star resistance, because the one-year bear trend, as defined off that July high of last year, remains bearish. And if we can close above 222.22, then it shifts into the bullish column as we move into later year. But until then, this is the area to sell if you're looking for a sell opportunity longer term. You know, that could be being long Tesla presently. And if you're looking for a spot to unload Tesla and kind of sit on the sidelines and wait and see how things play out as we move into the third quarter, 222.22 is your spot. It's also the spot to get long again if we close above it. And so I think that is that. Now, I'm going to take us back just a little bit here to the last few weeks. We were in a sell signal mode about a month ago or so when we were tested that long-term trend line. And then we had positive earnings, gapped higher, that actually neutralized everything. And then we gapped above this channel top that is at 167.02. I don't know if we'll see that today. I still have it weighted as just an intraday level because I don't see it as a directional indicator really anymore. I mean, we did test this channel support after having gapped above it on that Chinese automated driving news a few weeks ago, but we also closed below it about a week and a half ago without any downside follow through. So I'm reluctant to consider this a directional pivot point, but if tested today, 167.02 can contain at least intraday, if not daily selling pressures. Now, upside, we have 176.86, and I bumped this up from a session containment to a weekly level. We are right, actually, technically, we closed higher than this point. We did not close above the channel top, but we did close 177.46 on Friday. So a mere unchanged opening would roll the market above the 176.86 channel top. And under that scenario, we could today, in fact, I think probably would today, test this near-term channel top at 183.17. So pushing or opening, and opening is a real possibility today, above 176.86 does signal 183.17, where we could top out on an intraday basis. I will say that closing today above 176.86, which we've yet to do, the market has yet to close above this now 2-week channel top. Is that 2 weeks or 3 weeks? I think it's the better part of 3 weeks. Is it 3 weeks today? I think it is. The Chinese announcement, the China automated driving announcement was 3 weeks ago today. It was on a Monday. And so we've yet to close above 176.86. And if we do so today, I think by the end of next week or sooner, this 198.18 formation is likely. And we've been talking about this for a long time, 198.18. I bumped 176.86 up to a 3-star resistance from session containment, and I bumped 198.18 up from a 3 to a 4-star, meaning that it could, if tested over the next week or two, contain buying quite possibly through June. And we could fall away from here. And it would be, FYI, a settlement above that 198.18 formation that would then indicate this longer-term channel top on the weekly chart at 222.22 within a matter of 1 to 2 weeks. You can see it actually clearly shown here on the daily chart. You know, if you enjoy trading Tesla, it's essential to explore opportunities with the SPY and Triple Q. Widely recognized as top choices for both day and swing trading, these market giants offer significant advantages. Their higher trading volumes ensure tighter bid-ask spreads, optimizing your buying and selling experiences. Plus, as broad market indexes, they're less susceptible to sudden market shifts, making it easier to navigate ongoing trends. At Wicked Stocks, we deliver daily analysis in both the SPY and Triple Q, mirroring the same level of detail seen here on Tesla. Our downloadable daily newsletter provides actionable insights and helps you identify the most important price support levels.
Visit wickedstocks.com and take advantage of our 5-day free trial to experience the impact that our SPY and Triple Q analyses can have on your trading journey.
So 176.86. If we close above it, 1 to 2 week rally to 198.18. And I will say that if we close today also above 183.17, I think by Friday's close we test 198.18. So closing above 176.86, I see no good reason to be short Tesla if your time horizon is anywhere from like 3 to 5 days out to 1 to 2 weeks, because over that time frame I would expect 198.18. Secondarily so above 183.17. In fact, you want to be long, I think, aggressively above 183.17, talking to 3 to 5 day swing traders. In fact, I think you can go long above 176.86, but the final shoe to drop on that, 3 to 5 day rally perhaps to 198.18 would be a settlement today above 183.17. But I'm keeping it light here. Intraday resistance only might actually contain daily buying pressures, but being that we could be trading today above 176.86, I think buying pressures can build, and they're the kind of buying pressures that can play out into later week. Closing above 183.17, 198.18, a mere 3 to 5 day target where we could top out for the week, and yes, quite possibly through June and fall away again from there. And finally, once again, closing above 198.18, I'm expecting the 222.47 level. This could be a 2 to 3 week, 1 to 3 week, something like that rally where we could actually top out through all of Q3. This is the level that I was mentioning just a moment ago on the weekly chart at 222.22. That is sort of the long-term position traders pivot point. If you're long Tesla, my recommendation is to lighten up at 222.22, maybe get out altogether, maybe play the short side. If you're keen on playing both sides of the market, say with options, you could then reach for, say, 140 strike out of the money puts that don't expire. I would go several months out on that expiration. And inversely, closing above 222.22, you want to be long across all time frames as we move into later year. Let's cover the downside a little bit better. Holding, if we open today below 176.86, 167.02 is in reach. That is that former channel top that goes back several months. I don't see that as a level that can contain longer term selling pressures, and you could consider this to be a session containment level. I might have considered it to be session containment, but once again, holding below 176.86 will keep channel support that is presently well below the market, well below the market at 159.16, holding below 176.86. There it is, holding below this 3-week channel top now. Now, we have yet to close above it. We closed just below it on Friday. If we open below it on Monday, begin to ease south, we could perhaps ease south to the 167.02 formation. That could be it for the day. This is the day trade dynamic. But I'm talking to 3 to 5 day, 1 to 2 week swing traders that an inability to close above 176.86. If you're short, you can stay short, down to channel support that is presently at 159.16. It's hard to put both of those formations on the same chart because the lines they don't exactly line up. You use a different set of lows and highs by a degree. So holding below 176.86 will keep 159.16 in reach, possibly by the end of the week, especially if we close today below 167.02. Then I think we're 1 to 2 days away from testing 159.16, where we could place a weekly low, round back up perhaps to the 176.86 formation. We could trade inside of this zone for the next week. If we close above 176.86, 198.18, as I say, within 1 to 2 weeks. If we close below 159.16, then we've got 1 to 2 weeks south to 140.50. 140.50, once again, that long-term trend line that stems off that March 2020 COVID low that contained the selling pressures in April and may well contain weekly selling pressures. But I have a hunch that on the next test, this is very susceptible to violation, and we could then continue south to 101.81. But I don't really want to go there. I'm not swinging for the fences here. I think stair step is the right approach to the downside. And so I'm going to outline stair step here right now. Stair step 1, holding below 176.86, we'll keep 159.16 in reach. over the next week or two. 159.16 can contain weekly selling pressures, but if we close below 159.16, 1 to 2 week target at 140.50. At 140.50, we can bottom out on a weekly basis. And if settled below, we then enter a 3 to 5 week sell signal down to that 101.81 January 23 low. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back tomorrow with Tuesday's Tesla report, and you have a great day.